Welcome. Alpha and Omega and Tomas Byron are not a broker-dealer or investment advisor. The content given by Alpha and Omega is strictly for educational purposes only. Options, futures, bonds, and currencies involve risks and are not suitable for all investors. Past performance is not necessarily indicative of future results. For personal use only. All information in this presentation is for your personal, non-commercial use only.
Welcome, everyone. I'm Tomas, and today I want to introduce you to BASE, the BWB Apex Stability Engine. Now, before you think, oh no, here we start with short signaling and obscure words again, I want to assure you that's not what this is about. BWB stands for Broken Wings Butterfly. That's a specific option structure. Apex means peak or top, the highest point. Stability engine means we're building a system designed to maintain control. So BASE is literally a broken wing butterfly apex stability engine. Simple name, clear purpose. This presentation is about a different way to think about managing weekly options positions, and we're going to keep the language clear and straightforward throughout. Before we dive into solutions, let me be clear about the problem most traders face. Weekly options trading looks simple at first. Enter a position, manage it through the week, exit. But in reality, it's much more complex. Most traders fail not because they pick the wrong direction, but because they don't understand the structural stability of their positions. Let me show you why traders struggle with weekly options. The problem is multifaceted. First, strategies break when price accelerates. You have a plan, but the market moves fast and your position structure falls apart. Second, adjustments depend on perfect timing. You think if you can just add the right hedge at the right moment, you'll save the trade. But timing is impossible. Third, risk explodes near expiration. Gamma risk increases as you get closer to expiration, and most traders don't have a systematic way to manage it. Fourth, they manage emotionally, not structurally. They're reacting to price movements instead of reading the actual structure of their position. And here's the key insight. The problem is not direction. Most traders focus on predicting where the market will go. But that's not the real problem. The real problem is structural instability. When price moves, if your position structure is unstable, you're in trouble. That's what we're going to fix today. Built to address exactly these problems. First, it maintains structural stability during fast market moves. Instead of hoping your position survives volatility, you build it to be stable from the start. Second, it reduces stress during volatile weeks, right? When you have a framework, you're not constantly second-guessing yourself. Third, it provides clear decision points. Instead of emotional decisions, you have structured checkpoints. Fourth, it eliminates endless adjustments. You're not adjusting just to adjust. Every action has a purpose. Fifth, it prioritizes survival and consistency, not home runs, survival and consistency. And here's the key point. BASE is not about prediction. It's not about guessing where the market will go. It's about control. You control your position structure. You control your decision-making process. You control the outcome. BASE is for a specific type of trader. If you want a repeatable weekly process, BASE is for you. If you want to define rules instead of relying on your opinions, BASE is for you. If you want to limit screen time and not be glued to the market all week, BASE is for you. If you want to control your drawdowns instead of hoping for the best, BASE is for you. If you want a professional grade structure instead of random trading, BASE is for you. But I need to be clear. This is just not another signal service. We're not going to send you alerts telling you when to buy or sell without you understanding why. This is a framework. It's a thinking process. It's a system you learn and execute yourself. And after the workshop, if you're interested, we do offer a separate trade alerts service as an optional add-on. With the extra alerts service, we implement the same principles you learned in the course. This is not a black box system. It's an entire new method, and at the same time, a very specific, profitable approach. If you just want to follow the alerts, that's fine, but at least you know the trading method used in detail. That's the difference between a signal service and what we offer. But that's an optional add-on. This course is about learning the framework first. Inside this workshop, you learn several key things. First, how professionals think about weekly risk is different from how most traders think. Second, how to identify pressure versus instability. These are not the same thing, and the distinction is important. Third, when to stabilize a position and when to exit it instead. This is a critical decision point. Fourth, how to run a calm, repeatable weekly process, not panicked, not emotional, calm and repeatable. And here's what I want to be clear about. The exact mechanics are taught inside the workshop. This presentation is an overview. The course is where you learn the actual mechanics. The workshop is 3 classes plus materials. Class 1 is 90 minutes on framework, principles, and decision making. You learn the foundational concepts. Class 2 is 90 minutes on pattern recognition and annotated examples. You'll see real positions and real scenarios. Class 3 is 60 minutes of live Q&A and student scenario review. You can ask questions and we'll review your charts if you want. You can participate live or watch the recordings. All sessions are recorded. You get access to all the recordings, reference guides, templates, and trading helpers tools. These are checklists and tools to help you make decisions. And after the workshop, the Trade Alert service becomes available as an optional add-on, subject to minimum subscribers and exclusively for course students. In class 2, you'll see examples like this. This is a real Think or Swim screenshot showing how we analyze positions. You can see the payoff curve, the Greeks at different price points, the risk zones highlighted. This is what reading the current structure means in practice. You're not just looking at P&L, you're looking at the actual position structure, how it behaves at different price levels, where the risks are, how the Greeks are positioned. This is how professionals assess whether a position is stable or under pressure. Here's another example. When you compare positions side by side like this, you start to see patterns. This position has a different profile than the first one, different payoff curve, different risk distribution. In class 2, we'll analyze multiple positions so you can develop pattern recognition. You learn to quickly assess whether a position is in construction, stabilization, development, pressure, or reinforcement. This visual pattern recognition becomes intuitive with practice. What you're looking at here is important. This is the raw performance of the strategy. No reinforcement, no extra adjustments, no complexity. This is the pure basis strategy executed with minimum basic units. I want to be clear about what this represents. These results are back tested. And I know we're not strong believers in back testing, but we show you this because it demonstrates a fundamental point. This strategy in its simplest form already works. The data shows 31 trades, 30 winners, and only 1 loser. That's a 96.8% win rate. The average winner is $344 per lot, and the average loser is $202 per lot. The average expectancy per trade is $326. But here's what's critical. This data does not include reinforcement strategies. This is not adjusted positions. This is the base framework applied consistently without the advanced techniques we teach in the course. And there's another critical point I need to emphasize. We do not enter positions without filtering the entry process. This filtering is essential, absolutely essential, when we evaluate butterfly structures. Most traders skip this step. They enter whenever they feel like it. We don't. Our entry filtering process is what gives us this edge. So what does this mean? It means the raw strategy, when properly filtered at entry and executed without adjustments, delivers consistent, measurable results. And remember, this is without reinforcement. This is before we even apply the advanced management techniques you learn in the course. The techniques we teach actually improve on these results. So what you're seeing here is just the foundation. The full framework adds another layer of sophistication on top of this already solid base. We'll show you more examples and more details throughout the course. But understand this, what you're looking at is proof that the framework works at its core level. What we're looking at now is the same raw strategy, but with a different approach to capital and position sizing. This is still back-tested, no reinforcement, no extra adjustments, just the pure strategy. But in this case, we started with a larger initial capital of $30,000 instead of $8,000. Over 4 years, from 2022 through 2026, the account has grown from $30,000 to $260,894. The strategy executed 112 trades with 109 winners and 1 loser. That's a 97.3% win rate. The average trade return is $208 per lot. The average winner is $230 per lot, and the average loser is $562 per lot. Now, here's what's important. Notice that we've increased the lot size and volume over time. As the account grew, we layered in more contracts. We expanded position size according to the account balance. This is basic money management, increasing your position size as your account grows. This is what you learn in the course, how to layer positions, how to scale appropriately, and how to manage multiple contracts. This 4-year performance shows exactly what you can achieve by combining the base strategy with proper layering and money management. The compound annual growth rate is 69.3%. The Sharpe ratio is 1.52, and the Sortino ratio is 2.65. These aren't theoretical numbers. They reflect real discipline and real risk management. The maximum drawdown was 31.8%, which is significant but manageable. The MAR ratio of 2.2 tells you that for every unit of risk taken, we generated 2 units of return. But again, and this is critical, this is not highly optimized with reinforcement. We're showing you the pure strategy with basic scaling. We're not using the advanced management and adjustment techniques that we teach in the course. So what does this mean? It means that if you're expecting to achieve these exact metrics in live trading, you need to understand these results are back-tested. They're based on perfect execution. Real market conditions will vary. But more importantly, every metric you see here has the potential to improve when you apply the full framework with reinforcement, proper entry filtering, and the management techniques taught in the course. These numbers represent the foundation. The advanced techniques can enhance them further. The key takeaway, this is what's possible with disciplined execution, proper position sizing, and consistent application of the framework over time. One of the important things about Base is flexibility in how you deploy it. The framework itself doesn't change. The structure stays the same. The principles stay the same. But how often you trade is completely up to you. This is crucial because not every trader has the same schedule or risk appetite. Some of you might want to be conservative and trade just once a month. That's fine. The strategy still works. You deploy one position, manage it, close it, and move on. Others might want to trade twice a month, maybe the first and third weeks, or however makes sense for your schedule. That's the moderate approach. And if you're more aggressive, if you have the time, the capital, and the psychology for it, you can deploy weekly. That means a new position every single week, which is what we call aggressive deployment. The key point, you don't have to trade every single week to succeed with this framework. The methodology is consistent, whether you trade once a month or every week. The structure, the principles, the management rules, they don't change. Only the frequency changes. You control the pace, you control the risk. You control how many positions you're managing at any given time. This flexibility is one of the reasons traders find base sustainable. You can match it to your life, not the other way around. Now, let me walk you through the key advantages that make this strategy practical and accessible. First, the fast cycle. These are weekly trades, and typically you're in position for 5 to 9 days. That means you're not locked into a trade for weeks. You get quick resolution, you get fast feedback. That's valuable for your psychology and your capital management. Second, the equity growth you see is smooth. It's not all over the place. Yes, there are drawdowns, all trading has them, but they're controlled. The structure is designed to limit drawdowns through theta, decay, and proper position construction. That smooth growth matters psychologically and financially. Third, adjustments are simple and fields are easier. You're not trying to fill complex structures or make dramatic changes. When you need to adjust, the moves are straightforward. That matters in real trading. The easier the execution, the fewer things can go wrong. Fourth, this is small account friendly. You don't need $50,000 to start trading this. You can start with around $5,000 to $10,000. That's accessible to most traders. And as your account grows, the strategy scales cleanly. You add the more contracts, but the framework stays the same. Now, here's an important note on what we trade. This strategy is best suited for the SPX full contract, the S&P 500 index options. That's the primary vehicle. SPX offers excellent liquidity, tight spreads, and the kind of behavior this strategy is designed for. That said, the framework can also be applied to other S&P 500 products, ETFs like SPY, IVV, or others. But those applications are subject to liquidity constraints and execution limitations. When you're using options on ETFs, fields can be wider, liquidity can be thinner, and that affects your result. So while the framework is flexible, SPX is where this strategy shines. Now that you've seen the overview and some examples, let me dive deeper into the philosophy and framework behind Bayes. This is still an overview. The full mechanics are taught in the course. But I want to explain the thinking that drives Bayes. I want to be transparent about where this material comes from. I've spent 30 plus years in derivatives and options trading. This presentation reflects that experience. And importantly, we build this material to make complex concepts accessible for real traders, not to complicate them further. The course itself goes deep into actual construction and management. This presentation is designed to answer one question. Why should you even be interested in thinking about weekly options management this way? Most traders who trade weekly options face a consistent pattern. You have a game plan on entry. You're ready for some volatility. But a few days later, the market has done something and suddenly your position is uncomfortable. You're reacting instead of managing. You're making decisions on the fly instead of following a clear process. This is the weekly trader's dilemma. It happens every single week in different forms. Here's the insight. The problem isn't that you picked the wrong direction. The problem isn't that the market moved. The problem is that when the market moves, your position structure becomes unstable. And most traders don't have a systematic way to recognize that instability or decide what to do about it. They react emotionally, they adjust randomly, they panic exit, all because they're not reading the position structure. Most traders ask themselves, where is the market going next? They think that if they can figure out the market's direction, they can manage their position. But here's the problem. Market direction is hard to predict. It's uncertain. Traders get stuck guessing, and when they're wrong, they make bad decisions. They add risk to positions that are already under pressure. They hold too long, hoping for a reversal. They exit too early because they lost confidence in their direction view. Base traders ask a different question first. Is my position structure stable right now? This is fundamentally different. Why? Because unlike market direction, position structure is observable. You can read it, you can measure it. And here's the key insight. A well-managed position can be profitable even if you're wrong about direction. Why? Because the structure itself is working for you through time, decay, and managed risk. If the structure deteriorates, you have a clear decision to make. Reinforce it or retire it. No guessing, no panic. This is the core insight of Bayes. You've probably experienced this. You were right about direction, but still lost money. Why? The structure was wrong from the start, or it deteriorated as price moved. Conversely, you've probably been wrong about direction, but still made money because the position was well constructed and the trade was managed. Base is built on this insight. Focus on what you can control, the structure, not on what you cannot, the market's next move. Many traders think the solution is better adjustments. If I can just add the right hedge or roll the right leg, I can save this trade. But here's what happens in reality. You add an adjustment, the market keeps moving. You add another adjustment. Now you have a complex, multi-legged position. The Greeks are conflicting. Your PL is whipsawing. You're managing multiple expirations and multiple risks. Eventually, either the position becomes so complex you can't manage it anymore, or the adjustments don't work and you're in a worse spot than if you'd exited the original position. Adjustment is not a saving mechanism, it's a management mechanism, and it has real limits. The first principle of Bayes, you're not just trading, you're building a position and managing it through its life cycle. A trade is a single transaction. A position is a structured system with multiple components, each serving a purpose. When you think in terms of positions, you think differently at entry. You're not trying to nail the perfect entry point. You're trying to build a structure that will survive various market scenarios. You're thinking about what can go wrong and how the position will behave if it does. This is the mindset shift that matters most. The second principle, you learn to read the current structure of your position. This is what we call the T+0 profile, what the position looks like at this moment with current Greeks, current payoff shape, current risk zones. Most traders glance at P&L and price. They don't read the actual structure, but the structure is talking to you. It's telling you whether the position is healthy, under pressure, or deteriorating. This is not mystical. It's not complicated. It's a skill you can develop. And it's the foundation of all good decision-making in Bayes. The third principle is critical. Every intervention must improve the position. This is where most traders fail. They adjust hoping the market will turn. They add positions that don't actually address the problem. They're adjusting for hope, not for structural improvement. Bayes is different. Before you do anything, you ask, if I make this change, will the position be in a better structural state? Will it be more manageable? Will it have a better chance of recovery? If the answer is no, if the intervention doesn't improve the position, then you exit instead. This sounds simple, but it's the discipline that separates successful traders from unsuccessful ones. The fourth principle: when you build a position, you don't deploy all available capital at entry. You preserve some capital. Why? Because this preserved capital gives you flexibility. If the position enters a difficult phase later in the week, you have capital available to reinforce it if that makes structural sense. You're not forced to exit. You're not forced to hope. You have choices. But if you've deployed everything at entry, you're locked in. You have to hope. You have to pray the market moves your way. Preserving flexibility is one of the most underrated concepts in options trading. The key insight is optionality. You're preserving your ability to make decisions. That flexibility is worth protecting. The fifth principle: positions have an ending. Not every position becomes a home run. Many end with a small profit. Some end with an accepted loss. Some end because time and gamma risk are becoming unmanageable. This is all okay. The goal of Bayes is not to make every trade profitable. The goal is to manage positions so that exits are professional, planned, and disciplined. You're not panic exiting. You're not hoping for a recovery that never comes. You're retiring the position when that's the right decision. And retirement is not failure. Retirement is good management. Bayes recognizes that positions progress through stages. There's a construction phase where the position is being built and tested. There's a stabilization phase where you observe whether the structure is settling normally. There's a development phase where everything is working as intended. There's a pressure phase where the structure requires closer attention. There's reinforcement where interventions are being applied. And there's retirement where the position ends. Not every position hits every stage. Some positions are born in development and exit smoothly. Others are born, move quickly to different phases and need quick decisions. The point is, once you recognize which stage you're in, your decisions become clearer. The first stage is construction. The position has just been entered. You're checking, is the structure behaving as I expected? Is everything in place as designed? Is the position responding as intended? In this stage, you're not yet in a hurry. You have time, but you're watching carefully. If something is obviously wrong early, you might stand aside before wasting time. Or if the structure is good, you will continue observing. Stage 2 is stabilization. The position has been entered and is now settling into its environment. Price may move. The position may show early losses. This is the normal settling process. You're not panicking yet. You're observing, is the structure behaving as designed under real market conditions? Is the position stabilizing as expected? Or is something different happening? Stabilization is a period of close observation. Early lack of profit doesn't mean the position is failing. It means the position is being tested. Your job is to read the current structure and assess whether it's stabilizing normally or whether it needs attention. Stage 3 is development. The position is in its optimal state. It's stable. It's working as designed. It's progressing through its intended behavior. There's nothing to do. This is where many traders get bored and start overthinking. They start looking for problems that don't exist. They adjust when they don't need to. In Bayes, the skill in development is doing nothing, watching, letting the position work. This is harder than it sounds because trading culture teaches constant activity. Bayes teaches that sometimes the best action is no action. Stage 4 is pressure. The current structure is losing balance. The position requires closer attention. This is a critical decision phase. But it's not necessarily the end. The position may recover on its own. It may stabilize at a different level, or it may require intervention. Your job is to read the current structure carefully and make a principled decision. Can this be managed or should this be retired? Pressure is not a death sentence. It's a fork in the road that requires clear thinking. Stage 5 is reinforcement. You've decided to intervene. You've made a structural change to address the pressure. Now you're in active management. This is not passive anymore. You're monitoring closely. You're using capital that you'd reserve. You're dealing with a more complex position. Reinforcement is an active phase. Each phase of reinforcement must continue to be justified by the current structure. If the structure improves, great. If the structure continues to deteriorate despite reinforcement, then you exit. Reinforcement is a management tool, not a saving mechanism. Stage 6 is retirement. This is where positions end. Some end profitably, some end with an accepted loss, some end because time and gamma risk are becoming unmanageable. The key is that retirement is planned and professional. You've been reading the structure throughout the position's life. You've recognized that the time to retire has arrived. You're not surprised. You're not emotional. You're executing a plan. And this is where discipline pays off. Professionals retire positions. Amateurs hold them, hoping they'll turn around. Inside the course, we go deep. You learn how to construct the position architecture consistent with the base framework. You learn how to read the T+0 profile of any position. You learn how to recognize the stages. You learn the decision frameworks for each stage. You learn what reinforcement looks like and when it actually improves the position versus when it's just hope-based. And you'll review annotated examples and lifestyle scenario reviews, realistic examples of positions moving through these stages so you can see the decision-making in action. But make no mistake, this is not just a method or a theory. This is a step-by-step, detailed, practical manual. Real positions will be fully disclosed inside the course. And you can start trading the strategy as soon as you finish the course, from any starting level, beginner, intermediate, or professional. Base is for a specific trader. You need to understand options, basics, spreads, Greeks, basic risk concepts. You're interested in weekly options trading. You're not looking for a system that promises high win rates or doubling your account. You're looking for a process. You want to know why you're making decisions, not just following rules. You want to build a skill set that will work across different market conditions. If that's you, base is worth your time. If you're looking for a magic system or a quick path to riches, base is not for you. Let me be equally clear about who base is not for. If you're brand new to options and not willing to study a bit, get foundational education first. If you need to win every single trade, base will frustrate you. Not all trades work out. If you can't follow a framework without tweaking it, base isn't for you. If you're looking for a guarantee or a promise of high returns, that's not base. If you prefer to trade on intuition, base is not your style. Base requires discipline, patience, and a willingness to follow a process, even when the market feels like it's doing something different. That's not for everyone, and that's okay. What makes base different from most approaches? It's not trying to predict the market. It's not a mechanical adjust when price moves system. It's not about saving every trade through clever hedges. Base is about teaching you to read position structure and make decisions from that foundation. It's about building a repeatable process so that over time, your decision quality improves, your management improves, and your results improve, not through luck, not through prediction, through process and skill development. Base is also not looking for past best optimized strategy levels. We're not curve fitting past performance or chasing the mirage of the perfect system. Those approaches work great in backtests, but fail in live trading because the market changes. Base is built on principles and structure that work across different market conditions, not optimized parameters that work only on historical data. The course is 3 classes plus materials. Class 1 builds the foundation, the principles, the framework, how to read structure. Class 2 shows patterns, annotated examples, and lifestyle scenario reviews showing positions moving through the life cycle so you can see the decision making in practice. Class 3 is live Q&A where we answer your questions and review real scenarios with you. You can participate live in the sessions, and all sessions are recorded so you can watch at your own pace. You get access to all recordings, you get reference guides and templates, you get trading helpers tools and decision-making checklists. You have everything you need to apply this framework. Additionally, after the workshop ends, a trade alert service becomes available exclusively for course students. This is optional and not included in the course investment. Various subscription options are available if you're interested. Please note that the Trade Alert service is subject to a minimum number of subscribers and is exclusively available to course students. There's something important I want to share about what makes our educational approach comprehensive. With our series of courses, we built the 3 foundational pillars of serious retail options trading. First pillar, ATM Weekly, part of the ATM Options Edge educational products, teaches time spreads construction. This is about understanding how spreads decay, how time works for you, and how to build positions that benefit from time passage. Second pillar, Condor Nest teaches dynamic conversion. This is about understanding how to adapt positions, how to convert between different structures, and how to manage positions that are already live. Third pillar, Base teaches structural position engineering. This is about reading structure, understanding stability, and making decisions based on what the position is telling you. Here's the critical insight. Together, these 3 approaches in our course series create the perfect trilogy of knowledge for serious traders. You get time, decay knowledge, you get conversion flexibility knowledge, and you get structural stability knowledge. That's a complete education. Most good traders only know 1 pillar, if any. If you're serious about this, you want all 3, and that's what our series provides. And here's what makes this different from most educational offerings. All of this educational value is paid for from actual trades we execute, not theoretical curve-fitted backtests, not a long list of strategies offered as a marketing trick. You see this a lot in education. Educators offering endless strategies, many of which they never actually trade. Some of them must be making money somehow, right? But not from trading. They're making money from selling the education. That's not our model. Our education is built on and funded by real trading execution. That's the difference. Let me walk you through what you get when you enroll in the full workshop. First, the complete base playbook. This is the step-by-step process for applying the framework, making adjustments, and managing trades from entry to exit. It's the operational manual. Second, the Excel Trade Manager. This is a custom-built model we created that handles stop-loss controls, adjustment logic, order tracking, and visual price levels. It's not a signal generator. It's a management tool. Third, full live session walkthroughs. You watch real examples of how we execute positions, how we read structure, and how we make decisions in real time. This is where theory meets practice. Fourth, tools and extra educational topics. We include various tools and optional educational content that supports your learning. Fifth, a private community. This is a Discord server where you connect with other students, share experiences, ask questions, and build relationships with serious traders who are learning the same framework. Sixth, Q&A sessions for each class. After each class, we have dedicated Q&A time where you can ask questions and get direct feedback. So when you enroll, you're not just getting a course. You're getting a complete learning ecosystem, the playbook, the tools, live examples, a community, and direct access to me. With the presentation, just follow the link or go to our website and you'll have access to download the PDF and get the full videos and details on tools and spreadsheets. The links you see here are examples of the spreadsheets and trading tools provided with the course. You can explore them to see what's included. What you're looking at is just a small sample of what comes with the full workshop. The actual spreadsheets and templates are more comprehensive than what's shown here. These tools are designed to work with both interactive brokers and think or swim platforms. Once you're enrolled, you'll have full access to all the resources, including the complete spreadsheets with all templates and customizations. These are working tools that you can implement immediately in your trading. Let me give you the specific details about the workshop schedule and format. The workshop consists of 3 main classes. We also have the flexibility to add an optional extra session if the group feels it's needed and beneficial. The first class will start on either July 15th or 18th, 2026. The exact date and the schedule for the subsequent classes will be announced as soon as possible. All sessions are recorded for replay, so if you can't make a live session, you can watch it afterward. The entire workshop course uses an LMS, a learning management system, where you'll have access to all materials, recordings, and resources. This platform is where you'll do your learning, access your playbooks, download your tools, and connect with the community. Let me break down the investment and pricing for you. The base workshop course, when offered at regular price, is $750. The Trade Alerts subscription for the first quarter is $450. If you enroll during the launch window, you get both the course and the first quarter of alerts for a combined launch price of $1,050. That's a savings of $150 compared to the regular prices if purchased separately. One important clarification: the Trade Alerts subscription quarter period starts only when the workshop is completed, not at enrollment. So you'll be taking the classes, learning the framework, and then when the workshop ends, your quarter of alerts service begins. After that first quarter of alerts expires, the alert service continues at $150 per month if you choose to continue. This pricing structure rewards early participants who commit during the launch phase, while giving you full flexibility to continue or discontinue the alert service afterward. Here's an important detail. You still have time to enroll at the launch price before the workshop starts. The launch pricing is only available for a limited period. Once that window closes, enrollment will still be available, but at the regular full price. So if the launch pricing is attractive to you, now is the time to make that decision. After the workshop begins, the course enrollment will continue, but the special launch pricing will no longer be available. The course investment, access policy, and guarantee details are available at your enrollment link. Seats are limited, so we can provide good Q&A interaction. If you're interested, enrollment information is available there. Before we close, I need to be clear about risk. Options trading involves substantial risk, including the risk of significant loss. The examples we show are educational only, and future results are not guaranteed. This is education, not financial advice. You should consult with your broker and your financial advisor before trading, and only trade with capital you can genuinely afford to lose. These are not just disclaimers. These are real risks. BASE teaches you to manage risk through structure and discipline, but risk is always part of options trading. Thank you for your time today. I know this was a lot of information, and I appreciate you staying with me through it all. What I'm hoping is that you'll consider joining us for this educational journey. This isn't just about learning a framework, it's about becoming part of a community of serious traders who are committed to doing things differently, structurally, thoughtfully, and professionally. I genuinely believe there's value in what we're building here, and I'd love to have you be part of it. If you have any questions, send us an email at support@atmoptionsedge.ch. But more importantly, I hope you'll take that step and enroll. Let's start this journey together.